Hey everybody, Day Trader Rockstar. And this video here we're going to do a review of today's S&P futures market, basically what we trade during the day, and the effect that this had today's sell-off, and how we could have read it better, or did we read it good, what setups were there, and anything we can learn from this. Because there's a couple important rules that I want to go over in the case of a trend day. And this is what we would call a real good, strong trend day. Trending down most of the day, staying very embedded on the 60-10. Everything that we call as a strong trend was happening. The price was under the moving averages. All moving averages were pointing down. The price is under the VWAP, under the 200-period moving average, most of the time under the 50 and the 20. And in the 60-period stochastic. So all these things tell us that there is a downtrending market, a bigger trend because of that 60-10. Pretty easy to look at the chart and see that happen also. So that's not a big thing. The thing is trying to adjust your trading to it. How do you adjust your trading to this? Because we're so used to going long and buying the pullback, and then the pullbacks don't happen, but you still look for them. When do you know to start looking for a short, etc.? A lot of these questions come up, and this is important. Now, in my case and in many cases out there, you tend to be more bullish than bearish. And if you're not, then you're not. But I would say the majority of people feel more comfortable buying the market than selling the market or shorting the market. So we tend to, I tend to look for these setups on the long side. But we have to be careful when you do have a recognizable downtrend, because now you're fighting the tide. And for me not to fight the tide, I had to develop a certain set of rules. Rules for me is what keeps me in line, or else I could be just as reckless as the next trader. It's very hard. We deal with emotions and stuff. You always want to be in the trade. If you're not in the trade, nothing's happening. So you always want it. And it's an open casino, And what you have to get over is the fact that you can't treat this like a casino, because you eventually will get caught, just like the house will always win. Eventually, you'll lose it. And that's establishing very bad habits. And very bad habits, again, is not professional. And for anything to be worthwhile and be successful at, it's not going to be by chance. You don't want that. You want to be professional. You want to know what's going on. You want to align everything to your favor, and establishing rules and what to do and taking out the emotion, taking out the biases that you might have. If you have a bias, alongside bias, you're looking for more loss. It takes this all out, and you have to actually apply some rules and just kind of meet them, and stay out of the market as much as you can if it's going against your grain. So, the market opens up, we start seeing some selling here, and we're always looking for those divergences and stuff and reversals. But you can see there's pretty much a strong trend down. We've been trading under the 50 to 200 and under the VWAP and the 200, and we're already starting this trend line I start to put in later on. But this is a sell-off we start. And we're starting to gradually look for levels to get a bounce. So here we kind of had a coil, and that was 10 and 15, and you actually got a decent bounce on this. But right at that point, we were looking at that this is the 9-3 stochastic, the top band up here. Once we get that rotation up and it fails and we're around the moving average, that's a textbook bear flag. So that bear flag is a continuation pattern for more weakness. And that's what we have to start eyeballing. All right, check that off. It hit the 80, it sold right off. We want to start watching that again. Hit the 80, sold off again. Hit the 80, sold off. Hit the 80 right here. I'm just kind of marking a little blue line above it, and then sold off. Hit the 80, sold off. Came back up here, hit the 80, sold off. Not that you're going to catch every single little trade here, up and down, and it's going to be very hard to do that. But what you should know is, don't fight. If you're going to be taking a trade, you might as well take the trade that the trend is your friend, and take it when every time it gets overbought is when you should short it. Not the opposite. Don't short into the weakness, because that's most likely going to give you a bounce. And this is the simple rules that you go, but our minds play tricks on us. We feel like we're chasing things. Like, oh, we're on the trend line, I should go long here, we're going to break out, and you go long, and then it sells right off, and you look back here, and the 9-3 was just overbought, and it turned right over again, and it got back up here again, and had a hard time, and started selling off again. this is a real strong trend day. And if you could establish that and see that you're 60-10, you have to just buckle up and just take these trades. Do not concentrate on the long trades unless you have a pure divergence. Now, I identified a couple divergences today. We had a lip divergence right here, and it was also on a brown line here, brown-orange rust-colored line is a support line that I've had out here for a while somewhere. Anyway, so we were looking at that. So we came down to when we bounced off it, but there was also kind of a lip divergence right there, and we were quadded up. So all 4 stochastics were oversold, and that's okay for this to be oversold and to be down here. You know, it's the 9-3 when we start to see that bounce, and then it comes back and holds up. Then we have what we call the quad rotation divergence, and we saw that on the 14-3 too. That was a little higher rotation. It was right there off of that candle, right on the trend line, right exactly right there. And from that point, it had a nice little pop. Now, we got in this trade. It was a good trade. I actually put this one out on the Voxer Alert. Now, the Voxer Alert, I'll plug that right here. Let's take a look at the Voxers. The Voxer Alert is our Futures Trade Alert Network. Remember that name, Futures Trade Alert Network. And what that is when I see what I call a super signal, and the super signal only is this signal right here. It's a quad divergence, or it's a quad coil, or it's a quad VWAP trendline combination. You know, you could fit it on one hand. You could fit how many setups that I look for. It's about 3. I would say average 3. Sometimes we'll reach a little and take some, other stocks, but the real super signals are what I use the Futures Trade Alert Network. These are ones that are very important that you be in front of the computer for. And even in a day like this, it was the best thing to do is to get up and walk away. That's fine. And then wait for the alerts. Go do something. Because this will suck. It's like walking around a casino with a handful of coins. You want to put it in a game. You want to try your luck. But, unless you're really taking the trades on the downside, you're probably going to be going against the grain, and you're not going to get the perfect entry, and you're not going to get the perfect exit. So it's going to be very hard to even get a profit on these bounces, especially depending on how small that bounces. I know that's tough to say now and doing it in live when you're doing it real time, but it does come to you. And when we see it, it's up to you. Like today, all day, we're saying the only trade we should be taking today. Maybe I even have this on the Voxer. I got sidetracked from my Voxer Alert. My Voxer, again, I send out these super signals. So what time is this? This is at 10:45. So maybe it's this one, maybe.
All right, traders, it is 10:57 on the nose here, and we're on a big support line here at 55.75. Make or break on this trend line. If we break down here, we probably have a lot more downside to go. Looks like a good support line to look for a bounce, but it is a pivotal area right now. Right on the lows, 55.75. It's not a divergence. It's not a buy signal. It's not a super signal. It's a market update that we're on a good a longer-term support line that we're going to watch here very closely.
All right, so anyway.
All right, traders, it is 12:11 here.
Let's take a look here.
Down into a quad rotation zone.
Well, that was the alert that went out for that level. I think right after I sent that alert, I did announce that there was a divergence then. That lip divergence is important. And I think that happened right at 11 o'clock when it started turning back up. Anyway, it moved up here. And this was the only time we had that 60-10 rotate back up into a overbought level. And right when we got that overbought level, that's what we call a quad sell signal, right? All 4 stochastics oversold. And that was it. That's all she wrote right there. All right, that's all she wrote, quad sell signal. There wasn't many of them. Market started selling back off, and then every time it got up to 80, it sold. Up to 80 on the 9.3, sold off. Up to 80 on the 9.3, sold off. Up to 80 on the 9.3, sold off. 130. And the trend, it continues down. Nothing on the downs, nothing here. Was there a little divergence here? I think at 115. I think there might have been a little divergence here. Let me see. Let me check my Voxer. Let's see what this says here. Oh, interesting.
All right, time is 1:15. We have a potential of 5-minute divergence. Could be a big level. It's 55.72. Put a stop under 55.70. And we're looking, again, the rotations back up onto the 80 level has been a key sell zone right here. But there is a potential, and we took that trade here with a stop at the lows of the day.
That was good.
Potential 5-minute divergence. 5-minute divergence here.
I want to make
That's
sure.
a buy. So
yeah, I tell everyone it's a buy. People email me, well, that divergence, was that a buy or sell? I'm like, oh my God. I mean, I hope you guys, could see on the chart, if we're coming off the lows and the stochastics are down here, most likely it's a buy divergence. So that was a nice little pop we got on that. We did get a little pop. And we sold right into that 890. And I realized that. I said, I'm going to sell into that. At least sell partial into your first day, move your stop up to break even. And then there's nothing to worry about. And that was it. And then we actually had a divergence. Excuse me. We actually had a divergence right at the end of the day. And that was the 350 reversal murder algo. And it had a nice little bounce. That was went from 55.20 up to close to 55.50, almost a 30 point. I would say 20 to 25 point bounce here. This is, the range is there. It's just about the setups. So here you had a nice divergence, a lip divergence, quad lip divergence right here, and you had one here at 230. It was a very small one, but got up to 80, and then you had to take it off. These would give you something, but you could see you're fighting it. I would think the short side is a much better trade on this, but the key is applying the rules. If you are going to take a long, you're going to try to do it, apply the rules. That's going to protect you. For me, I have to take it off on the first rotation. Even it hurts me sometimes because I'm the type of person thinking, what if this is the low? But it's not. 9 times out of 10, it's not, because you're not that smart. All right? I'm talking about me. You guys all call the bottom all the time. All right. Well, anyway, that's the lesson for today. That is definitely the lesson for today. It wasn't a bad day overall. It wasn't a bad day. I took my time on the trades. I didn't overtrade. Even going against one or two contracts, kind of testing the waters off of some lows. Sometimes I jump ahead of the divergence, and if it's on a divergence, I'll get out. But most of the time, you get that turn back up, you got that divergence, you're going to get a few candles. Just remember that. You're going to get a few candles. And now, again, this is going against the grain. The other important rule is, if you're here and you get an entry in, and you're moving back up into the 80 line, up above the 80 line, and this does not get back above 20, 25, that is a bear flag every single day. That is our bear flag setup. The bear flag setup is a move to the 20 or 50 period moving average, the rotation up to the 80, and this stays under 20 to 25, possibly even 30. I mean, this is a big line here, 25. And if everything lines up, we tend to have this breakdown. And everything rotates back down, and then you move down. All right, so just remember, a couple easy setups. Wait for your setups. Do not overtrade. Some days are going to be better than others, and you just and don't forget the Futures Trade Alert Network. Keep it handy. The latest Bullinox code, 90% one is off, but the 83% is active. DTR 83 is lifetime code for your prop accounts, and yes, the bots and stuff all work on the prop accounts. I've been getting that question a lot now recently, all of a sudden. So yes, that evaluation serial number they give you on the Bullinox or Apex is good. All right, that's it. I'll see you guys in the markets.